All right, people. So welcome on. Let's have a look at what's going on in the markets here. So I want to kind of switch the focus here for a minute. I know I usually do the weekly breakdowns and we go through every pair, but I want to kind of hone in on just a few things that I'm seeing. Now, I don't know if my markings are still on here, but even if we can still go through this again, I'm going to start with Euro USD now. I'm not the biggest trader of Euro USD personally, but I still do trade Euro USD where the opportunity comes alive. But I'm going to start from the monthly here. And I just want to show you guys what I'm looking at in terms of structure. So from the monthly time frame here, monthly demand is right here. And from this monthly area of demand, we're seeing the price starting to retrace quite a bit. The price came for these lows down here, and we've seen the price dip back into monthly demand. Now, before this happened, I was saying to you that there is the chance that the price will react into this area. It doesn't have to be a very strong reaction, but there can potentially be a reaction because this is a very strong area of buying liquidity or buying pressure in the market. Now, the most significant thing that can happen is for the price to break beneath here. But again, the price has shown us signs of reacting bullishly. And on the daily time frame here, we've seen the price formed a reversal signature at this area here, which was Friday, and we've seen the price push long. Now we were yet to see the body close above this area here because this is the major point we've been discussing. Following the price here, the market structure at the moment, even though from what I see here, I think there is potential for more upside. I think the dollar is showing signs of increased weakness at the moment, and I'll be intrigued to see how this goes out for the future. But just generally from what I'm looking at here, some of the highs that the price has formed moving forward, I'd like to see the market go for those highs and for the bulls to score some points and for us to see the price at least get to this 1.39 area here. So depending on how the price will behave here will be a very interesting picture for the future. Now, one thing that is good on the H4 here, we did get that body close. We didn't get the return yesterday that I wanted to see. We didn't get that return here of supply back into this area that was formed and the price using this area of supply as demand. But if the price was to come back down there, that would be a very clean and easy entry to go for a continuation to go long. So I'm watching out carefully to see what we have going on here. And I'd like to know what we're doing in terms of the price action moving forward. So if I put this here, this is my projection of where I believe Euro USD is going to go. Now, if Euro USD does break past this area, why is this area significant? Well, let's go back in history and have a look here. So if you've been following me for a while and you've been following the analysis, there is one important thing that I've been watching out for, which is the demand zone that was created here. Okay. And also the low that was formed not too far away. But at this area of demand here, we had a very interesting event. The price didn't return to demand on the pullback either time. So we didn't have any returns back to demand. So when the price came back here after strong activity of shorts, we had a break beneath, and you notice we had a return on the other side. So we had clear optimization of demand for supply. And then we've had a short. Now I want you guys to observe the price action here carefully. When the price was given this initial short, we had a very strong piece of price action. So if these are 3 days here, and in 3 days, the price dropped by 286.4 pips. Okay. Now from the return, okay, to where the lowest point of price is, it is further down than the former, but only by about 20 pips approximately. So if we call this about 310 pips. All right. Now this took, according to the crosshair, 34 days, but the movement from here to here only took 3 days. All right. So that gives you a lot of information about what side the market is leaning towards, which is the bearish side. So in a market, in this case, where it's showing very strong signs of bearish intention, and even though in the higher time frame structure, we do have a bullish piece of action going on, all I'm really seeing is the formation of lower lows and the order flow direction towards the short side on the long term from here. But if the price is to go long, I would expect it at least on the H4 to fill out that area here and get back to 1.20. At the end of the day, 1.20 or 1.200 is a round number level and a psychological one at that. So I would expect lots of activity to take place here. But really, for me, when I look at this market, I believe the price is just trying to find an area of supply conducive enough for it to be able to continue a short, I believe, is on its way. I do think that in long term, the euro is going to be bearish, okay, for several reasons. All right. But for now, not looking at the fundamentals from the technicals, I do see room for the upside. And all we would really need to do right now is look for some continuation entry. This is a good suggestion. There are others. This is probably the easiest one. And throughout the week, we'll be looking at this now. Is NFP week this week? Because the first Friday of the month is going to be September the 2nd. Am I right? Or September the 3rd. I have a 3rd or 2nd. My dates are not all completely correct in the head right now. September the 3rd. All right. So September the 3rd is when we have the NFP results at 1:30 GMT my time. And there's a couple of options here because of the news of the tapering, what we've had with the Jackson Hole synopsis recently, and what the Federal Reserve, specifically Jerome Powell, has been discussing in lines of possible tapering going on this year. The tapering, of course, would strengthen the dollar. And so that strengthening will definitely cause Euro USD to be pushing short, which is what the direction seems to be alluding to. However, even though we are looking for that short, NFPs are one of the best ways for the price to be able to lead into a greater move for the next week. So, for example, we could see a very strong weakening on the US dollar for the intraday period that we're in from now until Friday. And the next week, we could have the reversal of that, and the price could use that NFP push to the long side to then produce a normal short. So, if I was to put this into writing here, we could have very easily an NFP news driven. So NFP news driven long, okay? And then after, what we can have right back up here, which would be my target, is if the price was to go short from here, a natural short. So a natural short, which was a combination of fundamentals and technicals, but a natural short, which is not driven primarily by any form of news, but just normal order blocks and where price should be going in terms of economics. All right. So that's what I mean by a natural short. So in other words, the NFP's news could definitely produce a continuation long on Euro USD and other US based pairs, and then the reversal comes afterwards. Now, this is dependent on a few factors. If the price gets here for some reason before the NFPs come out, which is possible too, because we have the ADP and other pieces of news, and they could use that opportunity to speak, push the price, maybe not by 200 and something pips. But if that does happen, I haven't seen it happen before, but anything can happen in these markets. But either way, we could see the price, get here. And if the price was to get here before the NFP results, then I would sell, because then that means we've had the price cranking up to get to this point, and then the NFPs will be the trigger for the short. So we'll have a natural short and then a natural long and then the NFP initiated short, and then the rest is history. So I'm really watching carefully to see what happens here. And I'm keeping my eyes on the dollar really because the opportunities are quite large. Okay, the second pair I'm looking at, which is USD CAD here. Now, USD CAD, there's a plethora of options that we have. Okay, the price action is showing different signs of what the price could do. All right, from the D1 time frame here, we had a very strong long. Okay, and my real area that I'm watching at again is this area of supply. It's acted as a very solid area since July, the week starting or in that month. I don't believe that this is the week starting, but it definitely has been a very strong area of demand liquidity. It was a very strong area of supply throughout August until we had the break above August 17th and the return a few days afterwards. Now the price is supporting bullish activity, and it'll be interesting to see how far the price gets. Now USD CAD to me is still short, and I believe what the market is doing is reclarifying the bearish structure as best as possible. At the moment, USD CAD is inside of this supply zone area here, which is the last supply zone from the price action from 2020. So really for the year, USD CAD, not that it hasn't done much, but it hasn't really moved, substantially into one direction. It's kind of started quite high up in the year from here, pushed quite further down to the short side in June. And then we've had the price come back up again above the highs, but around the same kind of price points that it was at the beginning of the year. And then we've had a short reaction. So, in terms of direction, if we were to look at swing structure, then taking the swing highs, here is A, here is B, and we've just had the C formation. So really, I believe the price is going to be gearing up, probably reuse the weekly liquidity here and then go for a short. Now, how the price is going to attempt to do that, I do believe is going to come driven from this demand zone, supply zone, or demand zone slash supply zone. In other words, it's a supply zone, but the price is flipped towards demand. And I'll be looking towards going from there. So I'm watching carefully to see what USD CAD does. I'm going to go to the H4. Now, the H4 structure here, there is opportunity for reversal. And if I was to look for a long here, I'll be looking for the price to get somewhere around this range. But we'll keep our eyes on USD CAD. My eyes are towards the long side. And if I see something, then you guys definitely will be the first to know what exactly I'm going on to do here. So I'll put this here. This is USD CAD. Now I'm going to have a look at gold also. Gold has been on my radar for a while. And the reason why gold has been on the radar is very simple, because a lot of what's driving the market at the moment is now COVID-19 has presented an economic structure shift that, was going to come at some point, but I believe that COVID-19 really was the ushering in of that economic shift. Now, along with that economic shift has come quite a few changes to economic structure that needed to be in place. Well, I'll say monetary policy and fiscal policy. One of the biggest ones, which I spoke about last week, is asset purchases, so OMO. In order for the price to be balanced for treasury rates and for interest rates and things like that, open market operations is a part of the range of tools that the Federal Reserve used to control money supply and interest rates and prices and control inflation to a certain degree, or as best as they can, I should say. So at the moment, gold is really like if I was to take gold as what is likened to, for me, gold is like a pH test or a litmus test for inflation. If you want to know what is going on with inflation, just look at gold. All right. When you see gold starting to make new highs or start to push very strongly towards the bullish side, it means that most of the time for legacy financing, for example, and other wealthy people who have a lot of money, they will definitely be pushing their money towards putting it into gold. Not all of it, but some of it, because gold is a very great store of value. So what I'm looking for is a long on gold long term, but short term, there is opportunity for a short. So looking at the schematic of the price here, so we've had reversals along here. We see the price even return back to the demand area for this. And we're seeing an extension of the long price action moving forward here. So what I want to see is how the price is going to lead from here. And, looking into this week, it seems like the week has started with a wick here, and the price has been hanging around this price range. So again, we're in major areas on gold where the price could give us either a very strong short or a very strong long. Now, there's two sides to this story now. Bearing in mind what I've said about inflation, all right, gold, of course, will definitely be increasing in value over time. It's a fact, because gold is, similarly to what I discussed with cryptocurrency, is a store of value, because theoretically, there is a limited supply. And the reason why there's a limited supply is because there's a finite amount of gold that exists on the earth. There's only so much gold that exists on the earth, unless you create some, which I mean is basically near impossible to do. And the amount of gold you're going to create, for example, in, I don't know, in CERN or something, or in a Hadron Collider or something, is not really going to produce anything of wealth, all right, or even be stable. So gold has a very finite amount that exists. So does silver. And silver is even worse, because silver really takes on, I would say, really takes on features of a cryptocurrency, because silver has been burnt, because it has to be used. It has to be changed into other materials in order for us to have some of the goods and services that we so enjoy in the modern world. So for that reason, I would say when it comes to gold, I'm always going to be bullish on gold no matter what. Now, in a period of high inflation, one of the things that central banks do, especially towards the Western hemisphere, so the richer parts of the world, is that to discourage buying, which is just the truth. I mean, there is data for it where gold is manipulated for the price to be a lot cheaper than it's supposed to be. And this is to discourage investors and smart money from, they, even though they're not discouraged, but just to discourage even people who want to exchange their currency for gold as a hedge against inflation. This is an discouragement that we see. Now, we've seen one big one here where gold just crashed randomly, it seems, from all the way from here to the last NFPs that we saw right here. Now, this last NFP produced this massive short, and when the market opened, it continued with a massive short. Now we're in this same supply zone that was the trigger for this short, and the NFPs are on Friday. So I don't know if the NFPs are actually going to produce the short or the long that we want. Now, this discouragement for selling can only happen for so long, and the price can only be depressed for so long until it starts to take off. And we saw right here in the pandemic period of time right here, gold made a new all-time high at 2,773. Some charts say $2,075, but we made a new all-time high. This is the highest price point we've seen on gold in the history of mankind. All right, and I don't believe that it is done. There is chance that the price can go short because we have areas in the price action that denote to that. For example, this wick right here, I do expect it to be filled out. But how that is going to happen is going to depend on so many different factors. Now, on my charts with Hugo's Way, there is a liquidity gap here, which I was trying to allude to last week between $1,850 to $1,855 approximately. So there is a chance that the price may spike even further long before it makes any journey towards the short side. But what I would say is that I am keeping my eyes firmly fixed on what gold is doing, because gold is definitely going to be the litmus test for inflation as things ramp up, and also crypto too. Now, gold and Bitcoin, for legacy people, gold is Bitcoin, and for the newer version of investors, Bitcoin is gold. All right. So, but either way, this hedge against inflation is the same as the picture I'm watching for. So what does that mean? Now, the US dollar is going to undergo tapering most likely this year. This is the expectation. And from the way that Jerome Powell is speaking, I do think that we are going to see that this year. Okay. And if tapering does continue, then that would strengthen the dollar. And that would mean that gold versus the US dollar would actually go short instead of long. Okay. Because at the moment, every time the price goes up, it means that 1 ounce of gold, or 1 troy ounce specifically, which is what it's called, is worth more. It costs more and more to purchase. All right. So again, some of you wonder why gold? Well, gold, chemically speaking, guys. Now, I'm not going to go through that. If you want to find out about this, in the description below, there is a channel called The Wealthy Channel. And it's a series of 8 videos I made way back in February that break down all of these things in deeper detail. So please go and watch it. They're at least 2 hours long each. So there's a lot to feed on, a lot of questions you can ask me. But just for now, you have to trust my word on it, or go and watch the videos for you to see what's going on. So in terms of a gold play at the moment, there isn't much I could say because the price really is just giving us a reaction above the high of the previous week. And this is the range really that I'm looking at that the price is behaving in, but nothing substantial yet. But if the price was to pull back somewhere, then there is the potential for the price to come back down again and either use this area of demand, which was where the concentration of demand is, where we saw this very strong long before the price started to fan out a little bit into today and yesterday, and then continue in this long direction. And my targets really would be to fill that liquidity gap at least, which is all the way back up here. Now, in terms of trades, that is a fantastic trade of about where we are, 615 pips. Now, for me, I've been trading for many years, and how gold is behaving, I've never seen it like this in my life. All right. And the reason why I'm saying this, from 2019 into 20, I could really see the shifting transition of gold. Gold is producing a lot more pips per movement than what we used to see on average. So I'll give you a very simple example. So right here in this day, this is the 25th, or on this day, I should say, this is August 25th. We have about 200 pips created in a day. Now, for you to put this into perspective, when I started trading gold, All right. I was trading gold all the way back in 2016 here. All right. Now, gold, to do these movements back in 2016, okay, was a lot more difficult, and there was a lot more smaller, or a lot more smaller in price range, especially in August. In these periods here, you can see that some days gold done 120 pips, 73 pips. The range was a lot smaller. Now it had its days. There were some days where certain things happened, but the candlesticks were a lot smaller. Now it doesn't mean that we didn't have large, days, but throughout the year 2017 especially, and you can see even 2018 right here, very tiny movements here, 70 pips here, 80 pips here, was a very good day. Now on average, we're seeing gold doing a lot more of these movements of 200, 300 pips in a day, and it seems from when we look at the price from the daily structure, it doesn't even look like gold has done much. So I believe a lot is coming for gold, and I'll be intrigued to see what happens here. But just looking at the market structure of this continuation of a bearish trend, I mean, we can clearly see that we have some sort of swing action going on here. Now I'm going to use lowercase because I'm on the lower time frame. So let me put this here. I'm going to go for A. Looking at here, we have B. Okay. Now, it's capital. I need to take that off. Let's put this in lowercase. So B. All right. So, and then we have next is C. So A, B, and then we have C. Now C could potentially be here. In reality, I mean, if we were to do this properly, we could go for the most recent swing. So we had an A, B, C, and D complete structure of price here. And if the price holds in the same structure, then really this swing down here is A, and this is B, okay? And then what we should be capturing right now is either a C swing back down to here, or the price may, and this is important, if we're going to have a continuation of bullish structure without breaking market structure rules, then if I was to extend this line over here, we would need specifically, we could have a lower down C or C number 2, but then the wick of the candle is going to need to close beneath A, not the body. If you have a body closed, then that means we have a break of market structure, and we should really be looking for a sell and not a buy. All right, so there is a chance that C can close below A, but I repeat, there needs to be a wick close, not a body close. So in terms of a suggestion for a trade, this is one. If the price was to push a bit lower, then, I mean, this H1 area is something I've been eyeing up also as another area potentially the price could get to. And we could have a deeper pullback altogether. So we could have a shorter term market structure break, and then the price could continue. But for me, I'm going to call this C number 2, just to make sure that you don't get confused. But really, these are the things that I'm looking for. So in terms of NFP opportunities at the moment, tomorrow when we look at the figures of the ADP when they come out, now if you're not too sure, I'll bring this up for you here, guys, so that you can see what I mean when I talk about the ADP, who they are or what they do. If you are familiar with them, then no worries. I'll run through this so that we can have a good picture to see what goes on with price. So I'm going to share the screen. Let's quickly go over to the news. Let's have a look at what's going on here. So with the news at the moment, the ADP news for August is coming out at 1:15 GMT tomorrow. So if you can recalculate for your time, then you would know. Now the ADP, okay, are the largest payroll company in America. Okay, if you don't want to believe me for it, you can check it right down here. So the ADP Research Institute, okay, so automatic data processing, okay, Inc. is a measure of the change of employment. Now the ADP themselves are the largest, and they have basically the most amount of data to work with. But you can use the ADP to have a good picture as to what's going on. So the ADP, America's largest payrolls provider, okay, reports as a harbinger of the Bureau of Labor Statistics release of NFPs, usually published 2 days later. Exactly. So when you want to understand, or you want to have a representative picture of what possibly the NFPs might do, you can use the ADP. Now, the ADP doesn't account for all of the change of employment. Okay. Now, change of employment and NFPs are very what's the best term I can say, are very highly related or correlated. The reason is because every time a new person gets into work, they go on payroll. So every time a person is employed, that means that there's a new payroll being created. So in general, if the ADP results are positive, then the NFP results most likely would follow. Now, because the ADP again is the largest representative sample of the nation called the USA. And so if this result again is good, then we can actually make some assumptions that the NFP most likely will be good, but there can also be discrepancies also for a number of reasons. Okay, so what I would say to you guys is look to the ADPs tomorrow for what the price is going to do. And that will help us to have a better picture. Now it's at 1:15, which is before our live analysis. So we'll have enough time to be able to check this out. Okay, so keep your eyes peeled. My main focus will definitely be on the US NFPs and ADPs, and for us to see what happens in between. Okay, so let's see what happens here. On the dollar index, I still have my markings and I haven't changed my mind about the price action. I still see the discrepancy in price that needs to be fixed, which is we didn't get the return back into supply here when the price broke from this supply range. So we had the return into areas of demand, which come back all the way from 2018. Now, remember, the dollar index is what we would use to be able to help us aid our vision. Doesn't necessarily mean it's the only form of confluence, but remember, guys, confluence breeds confidence. The more confluence you have to your trade argument, which is your analysis, the more confidence you have, and the more chance that you would be right. Now, it doesn't mean you should have 1 million indicators on your chart and 5,000 different charts, but as in confluence with context, okay, would help you to be able to have better trades. So I would say right here, this supply zone, I'm expecting the price to return back to 91. We're in a very strong area of supply, and really we're in the only area of supply that is holding the price from really breaking back above. So if the dollar index was to push short, then we should push all base US dollar pairs down and all non-base or quote pairs on the way up. Okay, so Euro USD would help to push Euro USD long, AUD USD long, gold long, things of that nature. So when I look at this already from the structure of the price, if it does exactly what it's looking like it's supposed to do, then we should be seeing Euro USD go long and gold go long, and then US base pairs go short. So H4 and D1, being more specific, we have a pool of liquidity here, which I think the price will come back to, would be attracted to. And I would expect the price to get to the demand zone formed here and possibly even lower. So I'm expecting a body close within this area and then a spike down into this area. So you mark it down and let's see what happens. The NFPs could be a great trigger for it. The prices managed to stay consistent with this break of demand, this change from demand to supply. If I go right here, you see we have a demand zone, which really was which pushed it or was instrumental in pushing the price to some of its highest points. We had a break beneath here, and first attempt of return, which failed. Price made a lower low. And then second attempt here, we've seen the price spike here and then given us quite a strong reaction short. So I expect this to continue. And if it does, then we're right on track for the dollar to show some sign of weakness intraday until we get the strength again. So I hope you guys enjoyed that. And I'll catch you guys in the next video tomorrow and live session.